Good afternoon and welcome to the Blue Line Metals Edge here for Wednesday, January 4th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. You're watching us on YouTube. Be sure to like and subscribe. If you need additional information, go to our website, bluelinefutures.com. Be sure to register for a free 2-week trial on our research. I think you'll love it, and I think it's a good thing to check out here. Now, looking at the markets here, we do have some of the foreign stock indices. Those are the best performers so far this year, up between 4 and 5% at the moment. Gold, our best performing commodity, up 2.16%. The bonds up 1.99. They're starting to look at how much more interest rate hikes are the Fed going to do, and we'll get into that in a little bit. Platinum, silver, those are also your two best performing metals. And looking at the chart patterns here, you can see gold breaking out to the upside, continuing to look good, add on any kind of weakness you get here. And also on the platinum market, that's the other best looking metal. You want to add on any kind of breakdown as well. Now looking at copper, remember, copper's tied big time into the Chinese economy, and you can see that prices are rolling over at the moment. There was some data that came out that China was going to do some stimulus measures. However, one of the major cities with 25 million people in it, about 70% of the people have COVID right now. So they could be turning a corner on this thing, or it could be getting just a touch worse. We'll have to wait and see how that plays out. Crude oil prices really taking it on the chin. They came into the start of the year looking really good. We were north of $80. It looked like we were going to push back up. We were turning a corner. Then the concerns about the demand and also supplies increasing. So those two big things right there were really what weighed in on the market. And then you get into a few other things like the weather. Weather's been quite mild. You see that occur, you're going to have that weaker energy prices and natural gas and also heating oil. It'll have a spillover effect on that crude oil market as well. So getting into a couple other things here, we've got some economic data coming out. We did have the ISM manufacturing this morning, a little bit weaker. JOLTS number coming up touch a bit. ISM manufacturing prices coming down as well. But what you want to look out for today, FOMC minutes. How are the Fed officials portraying inflation, and how are they maintaining their expectations on on the inflation as well? So are they super hawkish? Are they dovish? So those are kind of the things we're looking at. And then if you're not getting the tactical insights report, you look at things like the probable range, upside 1871.30 on gold. Our upside probable range was 1876.90. The downside 1842. What was the refresh range? 1839.40. So you can see how to use these things. If you're looking at buying out weakness, look to add right around that refresh probable range on the downside. If you're looking at place to take profits, consider the upside probable range as well. We'll give you the reversal points too. So if you're looking at intraday trading between on a tighter strategy, you'll have these tactical reversal points. And then for the long-term strategy, you have where the breakout was. You can see on gold 1727.80 seemed like a light year ago that was up down here on this initial breakout to the upside. You can see on a 100-ounce contract, we're up $11,830. You're going to want to continue to trail that stop. You can see where the sell trigger's at. You can see where, if you're going to use a tighter stop, where you want to put it at. One thing to keep an eye on these reports is that, you look at the crowding analysis on these different markets, and you go to something like platinum, and you're wondering, hey, who's shorting platinum, or who is short in this environment? You can see right here, short positions. Here's the producer. That's the color scheme that coordinates with it. You can see how much they represent of the short position. So remember, it's not always this market manipulation, big guys shorting, papers going short, things like that. It can also be producers. You've got a lot of miners out there that are looking at hedging forward production. They realize that, hey, there's a recession here. Let's sell. Let's lock in our price points on this rally that we've got going on. So something to keep an eye on and look at. And then also, you look at a couple other things that I was outlining, which was, where we're at. We're going to be in a shallow recession on that first quarter. The 2-year, 10-year spread continue to roll over, cementing that we are in a recession. And then you look at how the Fed officials are going to take things. About a 72% chance of another 50 basis point rate hike. So if you have any questions, futures option trading, give us a call. 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.